morning, everyone. My name is Joseline Nicholas. I am a realtor here in Guelph, Ontario. My team serves the markets of Kitchener-Waterloo, Guelph, and Hamilton. So we do have a team, across most of Southern Ontario. I got started in real estate as an investor. I used to work for the government of Ontario, and I used to save up all my income to buy properties. And then I got to a point where I was confident to transition into real estate full-time. So that is what I'm doing today. So I'm really excited to be here and talk about real estate because that is one of my passions in life. So today I'm really excited to be hosting a webinar with Farhan and Paul. Both of them are leaders in the real estate industry, and I'm really happy to be here and hear the perspective on what the market is looking like for 2023. Paul has been in real estate for over 35 years, and he started in the first 20 years selling homes, helping families here in Guelph sell homes. And within that time, he sold about 1,200 homes. That is a lot of homes. So I'm really excited here that you can bring your experience. In 2011, he started his own brokerage, starting with 4 agents, 4 realtors, and now Keller Williams Home Group has over 100 agents here in Guelph, Ontario. So that is very impressive, Paul, and I'm here I'm very excited to hear what you have to say today.
Thank you, Joseline, and it's a pleasure and an honor to be here. And I'm excited to share my research and answer any questions that folks might have.
Absolutely, absolutely. Now, moving on to Farhan. Farhan, I have known him for a few years now. He started we met as a mortgage broker. So he's been my mortgage broker for the last few years that I've been an investor. Farhan has been in the industry for about 20 years, and he brings experience in commercial and residential real estate. So regardless of your experience, as a buyer or a seller, Farhan will be there to support you. He has a team that covers most of Ontario. And I'm really excited for you, Farhan, to be here. Another thing that I enjoy with working with Farhan is that he is also an investor. So his client profile are investors as well. And I love that. And I'm saying that because a lot of my clients are investors. So if you're here and you're an investor, I'd like you to know that here you have a mortgage broker who has the experience to tackle and solve problems that we face as investors. So Farhan, I'm really excited that you're here, and I can't wait to see your presentation and hear what you have to say. So at this time, I'm going to hand over the floor to Paul. Paul, please take it away and get us started in the presentation.
Awesome. Thanks, Joseline. And good morning, everybody. And welcome to the 2022 market recap and 2023 predictions. And the theme for my story basically is it's the Back to Reality tour. The story that everybody knows at this point, sales are down substantially from 2021. Gains that we made in late 2021 and through to Q2 of 2022 have basically been erased, both on pricing and in terms of the volume and the number of sales. And that's been indicative across the region. The GTA has been hit harder than this area, but it's been the same downward trend for everybody. Sales year to date on this chart in Guelph, we're down for the 12-month period. We're at 1,974 sales, which is down 25% from that same November period last year. So that number, basically, that's the number of homes that we've sold this year, and compared to that same time period, 12-month time period, the previous year. So that's a big drop in the number of sales. The reality of this is our sales numbers are now back in line with levels around early 2016. And what really this chart doesn't show is the growth that's been going on in the marketplace. So the population growth, the overall size of the market has been growing. And we're going to deal and address that later on in the presentation. So sales are down 25%, and prices in Guelph have retreated almost by 12% to 2021 Q1 levels. And the reality is, if you bought earlier than 2021, you should still be in positive equity territory for now. And again, we're going to explore further, what could be happening, especially given the interest rate increase yesterday that was more than what most people were expecting. There could be some other indicators there, but again, prices really spiked at the beginning of 2022. Everybody was saying it was it couldn't be sustained, and that's very much, it's indicated by dropping very rapidly back down. But you can see that, we're still well above where prices were in 2017 and 2018, 2019, 2020. So, it's not all doom and gloom in the marketplace right now. One of the things that we really look at is that median price of original price, sales price to list price ratio. So what are sellers actually getting? How close are they getting to their list price? So on this chart, you can see that all the four regions, Waterloo, Cambridge, Kitchener, City of Guelph, from 2009 all the way to 2017 were basically on the same line, that they were all getting around 96, 97% of list price. 2017, you could see a little bit of a spike there over 100%. That was the first time that we really started to see multiple offers in the marketplace. And then it settled back down. 2019, 2020, it was, again, a bit of a slower market, but still you can see there that we were getting very close to 100%. And then we hit 2020, 2021, the pandemic, 2022, and things spiked incredibly. And then now you can see that it's dropped on that 12-month period. Guelph is down 4.8% to show 101.8%. The reality is it's actually dropped further down. And my next chart will show that it's gone back close to normal. And here you can see, based on a monthly chart, you can see the spike in 2017 there. You can see the big spike up to almost 130% of list price in early 2022. And now you can see that we're back down below that 100% mark in the line. So that was, the people scrambling to buy properties during the pandemic. The news in the marketplace was very much about a lack of inventory. People were thinking this was going to be a long-ranging pandemic. It was going to change lifestyles, and to a lot of degrees it has. It's got people doing a lot of remote work. People have chosen to relocate to other markets, and Guelph was very fortunate to see a lot of people come here. But again, those prices have now gone back to more reasonable sales to price ratios. And so that is some good news for buyers, that, they don't have to anticipate spending, bidding above the list price. Although a little bit of that does remain, particularly in the entry levels market and the move down market, where we've still got two large cohorts of clients that are looking to make moves there, and there still isn't much inventory. So it's, we're not out of the woods yet in terms of where pricing is. And that is indicated by this chart that shows the monthly supply of homes in the marketplace. And essentially what this chart is talking about, inventory levels, is that right now, the city of Guelph, there's 1.2 months of inventory. And what that means is, if we didn't take any new listings into the marketplace, it would take 1.2 months to completely exhaust the houses that were available in the marketplace. Now, that is still very much a seller's market. What we consider to be a balanced market would be 2 to 4 months worth of inventory. A buyer's market is when there's usually more than 4 months worth of inventory. And if you look to the far left of that chart, 2009, Cambridge was very much into a buyer's market. Waterloo, Kitchener, and Guelph is the gray line. probably balanced. And then you can see that gray line all the way across going from 2009 all the way up to 2022. Guelph has never really even hit a balanced market for the most of the last decade. And there's a number of reasons for that. And a big part of it is Guelph has never had as much inventory available on the marketplace as, say, a comparable sized city like Cambridge. And it's interesting because I've been able to observe this over the last 35 years that I've been in the market, that there always seems to be more homes available for sale in a market like Cambridge than there is like in Guelph. I just haven't figured out why that is. And so there's always that higher level of demand in Guelph, and that keeps prices a little bit higher. I used to think that it was partly because it was a university town, so it's attracting investors, it's attracting people to higher paying jobs. Cambridge was a much more volatile market because it was predominantly blue collar and manufacturing, so it was more susceptible to shocks and spikes in the economy. But the interesting thing now is, as part of this Back to Reality tour, is that we've now got room to have conditions in our offers. It's people have got some time to, really think about what they're going to do. We are seeing conditional on sale of property. We're seeing inspections and financing conditions again. And so this is where, as realtors, we're going to be able to show our value to our clients, because we're going to be able to analyze things. We're going to be able to help our clients negotiate a good deal, which just wasn't capable. We weren't able to do that in the last 8 months. New listings, City of Guelph, we actually had 7.1% more new listings over the last 12 months than the previous 12-month period. Kitchener was up 14%, Cambridge was up almost 8%, and Waterloo barely almost 1%. So you would think that with an increase like that, we'd start to see less pressure in the marketplace for buyers. But really what that doesn't take into consideration is how much the market has grown. Guelph back in 2011 was barely 120,000 people. Today it's over 143,000. So the reality of this is the market has not kept up with demand. Demand has been growing, and the market levels just have not kept up with it. Builders have been not building as much as they probably could have. They're going to blame it on the bureaucracy with the City of Guelph. But it's just Guelph has always been one with a tight market. So the emerging story on this, our regional market is converging. So Guelph, Cambridge, Kitchener, Waterloo are coming together to be more of a homogeneous marketplace. Whereas 10 years ago, we were very much distinct areas, and people would say, I only want to be in Guelph, I only want to be in Waterloo or Kitchener or Cambridge. And now what we're finding is that our buyers are prepared to go where they can afford to be and where they can get the best bang for their dollar. My prediction is that activity is going to remain relatively constant for 2023. There is a steady stream of people that are going to buy and sell, and will continue to do so whether the economy is in recession or not. Whether interest rates are high or low, there's still going to be a steady stream of people that need to do something. Don't expect miracles around increased inventory. The government is trying to lessen the red tape around people building infill lots, builders getting quicker approvals. That's going to take time to filter through the system. And I just don't expect inventory levels to suddenly get up to balanced, let alone get into buyer market territory. The one thing I'm going to be interested to hear from Farhan is, watch what happens in the mortgage market, trigger rates in the next 6 months, and you probably all heard about that in the news. But how, with the increase in the mortgage rates, how many people who took those low-priced variable mortgages and really extended themselves are now going to be in trouble and have to look to sell? So for me advising my buyers, I think there's going to be opportunities in the marketplace, unfortunately, because some people, went overboard on what they bought and will now have to, either find the funds to pay for the higher mortgage cost, or they're going to be forced to sell. And my ultimate conclusion on this is that the market is not anywhere near collapsing, depending on which media source you look at. I mean, the headlines, negative news always gets attention. And the market is far from collapsing. It's far from being totally negative. Now, if you're a first-time buyer, I think you're still going to struggle for the next 12 months trying to find something because of inventory levels, because interest rates aren't going to help. There just isn't going to be a ton of stuff to look at, and prices will not have decreased enough. So those tight market conditions are going to prevail. And ironically, that also means that in a lot of those first-time entry-level buyer markets, you're still going to be competing, because the entry-level buyers, that cohort, that demographic, is a fairly large demographic. We've got a lot of millennials that are coming into their prime first-time home buying age group, and we just don't have the supply to keep up with it. My advice for sellers, you guys should get back in the game, because one, I don't expect prices to increase significantly. And that's partly driven by the risk of defaulting properties that are going to force price drops. If the banks suddenly take back a number of properties through power of sale, yes, they're obligated to get market value, but they're not going to let a property sit on the market forever in order to get that. I've been through that kind of a market before, back in the 90s. Those properties will be good opportunities for investors, will be good opportunities for people wanting to make a move up in the marketplace. But I think the risk of potential defaults will also hold down the price increases. And again, as a seller, if you bought before 2021, you're still net positive. So take advantage of it now, before there's a further drop in the marketplace or other problems that way. So my conclusion: local market is still healthy. My illustration there will be, we've just come off the 401 at 120 kilometers an hour, and we're back onto a city street at 50 kilometers an hour. It seems slower than it actually is, but it's a reasonably healthy market. And as I said earlier, there are still people that are going to want to buy and sell, that have to, whether it's they've got a job, new family member, there's been death, divorce, whatever. That is always a constant in our marketplace. So those opportunities will be there, but you've got to be prepared to be patient and wait for the right opportunity. But when that opportunity presents itself, to be able to jump and be ready to go on things, because there's going to be a lot of people watching for those opportunities. So I hope that helped. It's not all doom and gloom. I think it's going to means as realtors, we're going to have to hustle and work and show our true value to our clients. But I think there's going to be some good opportunities. The growth that's coming into this part of the province and this part of the country just dictates in my mind that we're going to have reasonably healthy market conditions for the foreseeable future. So there you have it.
Thank you very much, Paul. That was very insightful. We do have some questions that came in while you're speaking. Okay. So I will reserve that and we'll tackle them after Farhan's presentation. Farhan, take it away.
I'm going to go into a bit more mortgage conversations, and obviously one of the things which we have seen during the 2022 years is one of the highest increases in interest rates. So I want to touch a bit upon that. We are also seeing lenders actually spending time on applications now. So that's actually a good news for a lot of people who are trying to obtain mortgage financing, because few months back, lenders had so much volume coming in that any file which required a bit extra work to look a bit more deep into, lenders were just turning it down. And now there is finally opportunity for those people with a little bit of more work on their application. They're finally seeing some approvals come in. We are also seeing from lenders' perspective that some of them are getting worried about default, especially when we talk about private lending space and alternative lending space. We are seeing some of them, some of those loans, especially the ones which got funded in earlier 2022 or more towards the end of 2021. Some of those lenders are panicking, and we are seeing that they are seeing potentially some loss on the funds which they lend out. Again, this presents a bunch of opportunities in the marketplace for both buyers and sellers. And I want to kind of go through it from more mortgage point of view. So I'll share my presentation. Just bear with me for a moment. Let me just get this. Okay. Okay. Dawson, can you see my screen now? Okay, perfect. So, good news for yesterday's interest rate hike is it's the last interest rate hike of 2022. So at least for 2022, we're not going to see any further increases. And other aspect of it, which came through from the language Bank of Canada shared, that this is going to be one of the last interest rate hike. The conversations I'm having with high-end officials at banks, as well as my friends who are economists, what we are expecting is possibly another 25 basis increase. And if things don't get into control, maybe another 25, but that's going to be the end of interest rate hike. So where we are at prime rate at the moment for lending perspective, prime rate, we're going to see that possibly going up by another 50 basis point, and that would be the stop of it. What also is happening is, if we take a look into our interest rate chart over here, that we have gone into a category which we haven't seen in the last 15 years or so. We are at a fairly high interest rate marketplace, which is forcing people to put more money towards their mortgage payments than they were initially doing. Going through some studies this morning, and with this new interest rate hike, especially people who have variable rate mortgage, a lot of people are contributing close to 70% of their income into their mortgage payment, which is not healthy. It should be more closer to 40%. And that's creating a lot of pressures on some of the homeowners, especially one which bought earlier in 2022 or more towards the end of 2021, is having challenges with affordability. But people, at least like with hundreds of clients I talk to on daily basis, what we are seeing is people are a lot more creative, and they are figuring out solution which they did not think of a year and a half ago that they would do. We are seeing a lot of families starting to have a family member move in and contributing into household. We are also seeing actually income for people going up. It hasn't that people's income have taken hit. So yes, the mortgage payments have gone up, but most of the people are coping just fine with it up until now. With the increase of yesterday and possibly one or two increases, yes, there is going to be a segment of population which is going to struggle, but overall majority of the mortgages, they're very healthy. There is not going to be any large scale power of sales, or people just want to get rid of properties. We don't see that. Where there is a bit of struggle coming up is we have to take a look into statistics of landlord-tenant board. Some of the tenants are not paying rent. And the challenge which it is the fact that before it used to be 3 to 4 months, you could kick out a tenant with LTB. At the moment, with the amount of applications they have gotten, they are more closer to 13 months at the moment. So tenants who are not paying, that is creating a very big nightmares for investors, especially small investors who have one or two homes. And we might see some of those people getting into the market and selling those properties just because they are at the moment. Alternatively, the other thing which is happening is the student rental business, or people which were renting out small segments of their home for the past 2 3 years, while the universities were almost shut down, that business completely dried up. And what we have seen in 2022, and that trend's going to continue in 2023, especially university towns like City of Guelph, Waterloo University, as these students, more and more students are coming in, those rents have gone up substantially. So we are seeing a lot of changes, and people are, possibly the people who are having difficulty paying their mortgages, getting someone in their basement, a student in, just to help them out with the mortgage calculations, mortgage payments, and so on. Really, what to expect in 2023? I see a bit of a rise in rate, but I also see possibly at some point in 2023, inflation is going to come in control. And all the conversations I'm having around lenders, they see more closer to end of 2023, where we're going to see possibly some drops by Bank of Canada. It's not going to sustain at the level where we are at the moment. It's going to eventually going to start going back, not to the pandemic level where the interest rate was almost free, but more closer to where the actual mortgage rates would be somewhere between 4 to 5%. We do expect that in 2023 that's going to start coming in. So I know there is some people who are panicking and they're thinking, oh gosh, how are we going to afford our mortgage payments, and how long it's going to last, and what's going to happen. Yes, there is some reason. Yes, the interest rates have gone up, but again, down. That's just a normal to the market. And as the inflation comes into more control, our employment data is still healthy. There is no big drop in employments in the last 3 or 6 or months or so on. Tech companies, some of them have lost jobs, but those have filled up a lot of them. There is still healthy competition. If you are looking for a job, there are jobs out there. So that goes conversation about employment. What we're gonna see is the next 2 to 3 years is gonna be a bit of a crazy time with the number of immigrants coming into, especially into our market. Most of these immigrants who are coming in are high skill and high, and Canada is no longer bringing in immigrants, especially the talks I have with people who are moving into Canada. They're no longer coming in with a very small sum of money. Most of the people who are coming in, they are coming in with large sum of points with them. I work with a couple of immigration consultants, and my conversations with them have been is people who are coming into Canada are on average bringing in over $500,000. So that contributes into our economy. We're going to see that short-term rental space get very, very, very busy, because keep in mind, for the last 2 years while we were in pandemic, immigrants did not come through. And now we're going to see 500,000 immigrants coming in over the next 2 3 years, each year at that number. Challenge on the other aspect is that we are not building enough homes. And I have a bunch of builder clients who we speak to regularly. And the challenge at the moment is they have stopped building temporarily because construction cost hasn't gone down, and it's costing them more money to build a home than what they are able to sell. So a lot of them are just sitting on the projects while real estate prices goes back to the level of where mid 2021 prices were. That's where their break-even point comes in, and they're starting to make some money. Good news for some of the things which is happening for first-time home buyers is there is finally they can go into home and they can put in an offer and negotiate prices, right? Earlier this year, last year, first-time home buyers were completely out of the picture just because most of the first-time home buyers do want conditional financing. They do want to do an inspection. They are scared. They're just getting into this market, those people couldn't buy a home. But now in my brokerage and in my mortgage business, we are finally seeing those first-time buyers jumping back into the market, qualifying for it. And there is some other good news coming up for first-time home buyers. There are lenders who have started doing longer amortization just to cope with a higher interest rate. So the payments remain constant. There is also talk about 40-year amortization, and that's what I want to go into. The next topic is we're going to see in the next 6 to 12 months, either the stress test going away because the interest rates have gone up a lot. That would allow people to qualify for more money. Or we're going to see possibly banks introducing interest-only payments for some period, or amortization going up to, again, back to the level where we used to have 35-year mortgages. There is two lenders right now who are doing 40-year amortization. So finally, we are getting to see some changes coming into that marketplace where as the real estate slows down, lenders are no longer getting that much business. So they are getting more creative in how they're going to get more business. And we are seeing some of those changes funnel in. There is a talk in Bank of Canada's as well as CMHC and high-level conversations going on where we do expect that amortization is going to be increased. It's not going to be at 25-year level just because it's making very difficult for first-time home buyers to get into the market, and they want to facilitate and make sure that first-time home buyers are able to get into the market. So we're going to see that change coming up in the next 6 months. So coming back to investors and people who own multiple properties, what should they do, right? It's honestly from to hold tight and sit there, because if you're an investor and if you do want to go and sell a property which is tenanted, you're going to have a little bit more difficult time than a property which is vacant, right? And yes, if you have bought 3, 4, 5 years ago, you have a lot of capital in it. But if you have bought in last 1 year or last 1.5 year, more than likely you're going to have difficulty recouping your cash. So if you can sit tight and wait a year or 2 or 3, we're going to get back into those prices. Again, the real estate prices are bound to rise. Might not happen in 2023, but if we take a look into a bit longer term, where we are just not building enough home. We have a lot of immigrants coming into this country. We have millennial at a fairly high level where they are getting into house market and they need housing. We don't have enough, maybe 2 to 5 years before they come into play. And we see that happening. A lot of investors are pivoting to more of short-term rentals, being student rentals, being Airbnbs, or being different creative family members moving into a property for a short-term period just to support those mortgage payments. We are seeing more and more and more of that going forward. Overall, I see more positives coming into 2023, because what was happening in 2021 and 2022, especially in the beginning, was a property would get listed for $700,000 and it would sell for $900,000. So a lot of people just completely got wiped off and they were not able to get into the market because they did not have that large down payments. But now we are more of back to how we used to do things, where people are writing condition of financing into the contract. They are forcing their bank or mortgage broker to do all that work in 5 days to make sure their file is fully complete before they sign off on condition of financing and make sure that they are able to get into that home. So that's my conclusion. I do see some really, really good products coming in 2023. I'm seeing more flexibility with lenders because they are finally starting to work harder for their business, which wasn't the case for the last couple of years. And I'm also seeing some positive changes coming up, which would help first-time home buyers or people who just own one property, to help them out in the marketplace. That's my conclusion. Back to you, Joseline.
Thank you very much, Farhan. I did learn some things and I have follow-up questions actually, but we'll get started with those who are here and those who have posted questions. Just as a reminder, we have a Q&A section down there. You can post your questions and I'll post them to Farhan and Paul. So the first question actually goes to both of you. So Paul, you can speak from a real estate perspective and Farhan can speak from a mortgage perspective. What advice do you have for a first-time home buyer right now? Paul, you can start.
Good question. And, this answer may sound a little self-serving, but it would be, make sure you're working with a good realtor that understands what your needs are, and a good mortgage broker that can help tailor make mortgage product to you. Because one, you don't want to get in over your head and have that kind of pressure on you. But, the market is still tight, especially for those entry-level buyers. And if you're not working with a good agent that's experienced and knows where to go looking for things, how to find properties that are off market or that are coming soon to put you in front of them, you're just going to be at a disadvantage. So work with a good agent, work with a good mortgage broker, get your team assembled again. That's your inspectors, the professionals that you want to deal with, and approach this in a very strategic way.
I love that, Paul. And you know what? Those who've been to a few of my webinars, they know my favorite mantra, so to speak, is be careful who you take advice from. Who are you listening to? Right? So I guess that comes back to make sure you're listening to the right professionals, people who have your best interest at heart and people who know what they're doing, who have the experience. So I really love that. Yeah.
Exactly.
Yeah. Farhan, from a mortgage perspective, advice for first-time home buyers?
Get a full pre-approval. What's happening in the marketplace, especially given what happened in 2022, was, you went on the website, filled up your information, and the lender kind of sent you a pre-approval, but it had 10 million conditions in it, right? So they ready to walk away from it. What ideally you want to do as a first-time home buyers is get your full pre-approval in place, where lender has reviewed your down payment, they have reviewed your credit, they have reviewed your income, and now you're fully ready to go out and buy a home. And the second thing which really first-time home buyers miss a lot of time is the necessity of working with someone who is professional and patient. Unfortunately, a lot of people have entered into real estate market. They look very shiny. They give very amazing reviews, this, that, all that. No longer interview their realtor to get into business with them. You want someone who is gonna work for you, who's gonna go after and make sure they have good home inspector who have ability to really know the property and not gonna get you into which is junk. You won't believe it how many times it happens that we get a call, oh, we are 2 weeks to the closing date and my realtor sold me this property, and now it turns out none of the lenders want to approve it because the property has this issue. Most of the good realtors, they would know upfront and they would not take the first-time home buyer into a property. I'll just share a quick example with you. Guelph has some buildings which are student rental buildings. You're not allowed to move into. One of the GTA realtors sold one of the first-time home buyer into that building, telling them, oh, you can move into it. And none of the lenders are going to approve it because they are not meant to live in. Those are student rental investment buildings. And we are seeing a lot of those in Kitchener, Waterloo, other parts of them. Just one example, but all properties which lenders won't approve, especially if the property requires significant amount of renovations in it, forget it. Major banks, the small monoline lenders, the credit unions, they're not going to finance those. So that's why it's so important, as Paul mentioned, to make sure you have a professional realtor, someone who works full time, someone who knows their stuff on your side. And same thing with a lender or a banker or a mortgage broker on your side, who's going to do all the work so you don't go through putting an offer, going through the inspection, paying $500-600 for an inspection, wasting all that time, and then finally getting to a stage and saying bank's gonna decline you. That's not something you want to do.
Absolutely, absolutely. The next question could either be Farhan or Paul or both. It's, what advice do you have for people who bought in early 2022?
Paul?
Well, I think, depending on what time of the year you bought in, you're basically going to have to hold the property or take a loss on it. Those price points are not coming back for the foreseeable future, unfortunately. So my advice would be, and this is what I always tell my clients over the years, look at real estate as a 5-year timeline. I'm buying it today. In 5 years, I should have built up enough equity to be able to sell it, recoup the expenses, and have grown my equity. And it's only in the last couple of years that formula was upset because of the way the pandemic drove real estate prices.
Yeah.
But historically, I would always tell people it's going to take you 5 years. If you need to sell this property before 5 years, be prepared that it's going to cost you money to get out of the deal.
Yeah.
That's the reality of it.
Love that. And I guess if I was to add one thing is, we've seen historically a lot of people who lose are people who panic, right?
Yes.
Sometimes people could even be in a position where you don't need to do anything. If you have a good rate, maybe it's fixed, you can afford to pay for the next 5 years. Why would you want to move and lose? So I would say maybe number one, don't panic. And as Paul said, just make sure that, it's a long-term strategy and not a short-term, like it's not flipping,
Yeah.
So
Yeah.
I'm glad that you said that. Farhan, from a mortgage perspective, what advice do you have for people who bought in 2022, in February 2022?
Oh, to be very honest with you, I bought in February 2022. So I'm in that boat right there. Okay. My property is probably down too. Okay. The reality is this, that it doesn't matter. If you're gonna hold the property long term, it doesn't make a difference. And don't only people just try to take a look into real estate just to kind of get a perspective, but take a look into overall whole investment marketplace, right? Take a look into what has happened to cryptocurrency. People have lost, I have clients who have lost over $1 million in crypto in the last 2-3 months. Tech stocks, they have gone through the drain, right? And again, very much it goes to show that real estate is no exception. It's correlated with the rest of the marketplace. So everything in 2022 kind of taken a bit of a hit. Now, the good news is this, real estate has taken a very, very minor hit, except for those people who have gone. I have a client who property was listed for 1.1 million and paid 1.7 million for it. But he had $1.5 million in his bank account. So he could sustain to do it. But there is some people who have way overpaid for the properties. And again, my recommendation is stay put. Give it some years, it's gonna come back, and you would be able to make some money into it. It's not, for those people, it's not the right time to sell. But if you have bought before that, like I was dealing with a client and she bought a property and rented it out in Kitchener for $300,000 in 2017. That property is still worth $800,000. Yes, in heyday, in January, it was worth, maybe 1.1 million. But if you see from $300,000, she put $60,000 down payment, took a $240,000 mortgage, had a tenant in it for 5 years. So the mortgage is down about $200,000. The property is worth $800 after paying real estate commissions, everything. She's gonna $1,000 profit on it, right? That is an incredible return if you just take a look into 5-year period and not look at just what has happened in last 1 year.
Yeah.
And that's exactly what's going to happen as we get into 2023, 2024, 2025. The market's going to come back. We have a lot more people coming in. We are not building enough. That's the reality.
Yeah, and I think this brings me back to also like some of the like the slides that Paul has with the graphs. You will see that the graph is not a straight line. You know, we have ups and downs after ups and downs. And as buyers and sellers or even investors, we need to understand that every market has ups and downs, and we just happen to be in a down market right now.
Yeah, exactly. And if I can jump in quickly, Joseline, we can go back 50 years in the Guelph real estate market. And I could show you a graph where the average growth in real estate has been anywhere from 3 to 5% a year.
Yeah.
And it's just steadily gone up. Some years, like this year, it's gone up. In 92, it took a big 25% drop. But when you look at the big picture, that 50-year period, it's been a steady return at 5%. And people that hold real estate long term always seem to come out on top.
Absolutely. Let's talk new construction. For people who are buying new builds, I know right now, even from a mortgage perspective, and I know this because I'm one of those who bought new construction, and now I'm closing, and my mortgage is going to be $4,000 a month. It's unbelievable. But from your point of views, Paul and Farhan, I guess from Paul, I'll say from a pricing perspective, a lot of prices have gone down across the board, but I don't know if builders have reduced their prices. For someone who's looking to buy a new construction, what would you say to them?
Well, I mean, do your research. If there's no alternative available for you in the resale market, and again, you're going to be there long term, it's always more affordable, and there's a better return for you if you buy early in a project, because there's a lot of people that can't buy from just looking at a blueprint or a schematic of the house. They have to be able to walk through it and touch and feel it, and then they'll pay for it. So the people that buy in early in a subdivision or in a building will generally get the best possible pricing. And again, you hold for 5 years or longer, and you should be able to come out on top.
Absolutely. And I love that you say people should do their own research, because historically we just believe that, new builds always make money, but that's not the case. Because a lot of the times builders, they're business people, right? So definitely run your numbers, look at some comparables.
And look at the reputation of the builder. There's sites that you can go and you can look at their reputation. Do they close on time?
Yeah.
Because if they're delaying things, and their contracts usually give them the right to delay 4, 6, 8 months before you get the option of backing out. Absolutely. Make sure that you're dealing with a reputable builder.
Absolutely.
And the agent that you work with will be able to do that.
Totally. Farhan, from a mortgage perspective, right now prices are where they are, but builders also are charging what they want to charge. For someone who wants to buy new construction and wants to know at the time of closing what rates will look like, what advice do you have for them?
Right. So I had a conversation with a lender. I had a client who bought last year in January. And since then, obviously, the prices have dipped. This year in January. But we were able to get his full approval, his appraisal, everything in on that time. And now the lender has to lend, right? The thing which comes with the reconstruction is, if you are going for it, do keep a couple of things in mind. Number one, you need to have higher down payment than when you are buying a resale. Keep that in mind, that you need to have extra money. Number two, make sure you obtain a full mortgage approval before you waive off all of your conditions. This way, that lender is obligated to lend on it, and you got yourself safety that you'll be able to close it. And if the rate drops within that time, you're gonna get a low rate. It's just make sure that you get all of that work done at upfront.
Absolutely. Now, Farhan, I have another question here from a participant who's right here, and they're saying, after the 1 or 2 interest rate increases that we're talking about for next year, when are rates likely to go down?
If I knew, honestly, I would be somewhere on a beach enjoying a really nice day.
Yeah.
Nobody knows, right? But the reality is this more starting summer to Q3 of 2023, our economy is going to stabilize. Inflation is already getting towards the lower number. So we do expect sometime more Q3 of 2023 is when we'll see the first interest rate drop.
Yeah, absolutely. Looking forward to that.
Yeah.
I have another question here, and this could be for both of you. Do you advise someone to buy a property now? Would you advise a client to buy now, and why?
It depends on your personal circumstances.
Yeah.
If you've got a bigger family, if you need to upsize or downsize, that you're not going to wait for the market to change to suit your needs. I wouldn't put my life on hold because interest rates have gone up. If I'm going to move because I need a bigger house or a smaller house, or I've got to relocate for a job, I'm going to do it.
Absolutely. And I like that you said that, because this is what I've been telling my clients. It's good to be aware of what's happening in the market so we can make educated decisions, but we also don't want to spend so much time timing the market. I think instead, let's get clear of what our goals are, right? So especially for my investor clients are asking, should I buy now or should I buy later? My advice has been, tell me what you want to see in a deal, right? Because right now is a better time to find that than we had a few months ago. When the situation gets better and rates are lower, there's more competition. So now finding what you want or finding that deal that's under market value isn't going to be easy in such a good market. So what I've been saying to my clients is, let's get clear about what we're looking for, and then we'll go find it.
Yeah, beautiful advice.
Yeah. Farhan, sorry we lost you, but I'm glad you're back.
No problem.
Yeah.
Seems like we are having some difficulty with the connection here. So again, circumstances matter most. If the investment makes sense, go for it. Right? It doesn't matter. Nobody's gonna time the market perfectly, but if you can retain a real estate asset long term, and I think I gave you that example last time too. Back in 2017, when the market was really high, I bought a property which was underwater for almost 2 years. But then in 2019, when the market recovered, it had gone up. And then I end up selling it in 2021, and we end up profiting almost $200,000 on it, just because we were able to wait that long. And that's the thing which most of the people need to go into real estate. Like whenever I'm doing a planning for most of my investors, I tell them what's gonna look like in 10 years, right? Like think of it that way. You don't want to get in because there is so much of high cost of getting in, and it doesn't make sense to do it in short term.
Yeah, that's true. Like we're not flipping, we're building wealth, right? And wealth
Of
building
course.
is a long-term thing.
It
Now,
is.
Farhan, there's a question here for you. What do you mean by full mortgage approval? What does that mean?
So there is really 4 sides of mortgage approval, right? First is your income, second is your down payment, third is the fourth is the property, right? When you go and get a mortgage approval, you want to make sure that your mortgage broker or your banker and look into your income, full income documents, and approve them. So you want to make sure that you go to someone who goes through at least those first 3 sections of mortgage. Like your down payment is solid, your income is solid, your credit is solid. They have reviewed everything, and then you go put an offer on a property, and then your probability of getting financing is very, very, very high compared to someone just printing off a pre-approval for you, which, believe it or not, most of the time when you walk into a bank or you go for these websites approval, they take a look into none of those. They just issue a paper saying that you are pre-approved based on the number you put in. But when lender is going to put a fine comp to it, oh, maybe you said your income is $110,000, but you included your overtime income. They're not going to use your overtime income. So your actual income might be only $90,000, and that's going to impact your approval. So those small details matter so much. That's where you can have a very good experience to a nightmare experience.